Okay. Good morning, good day, good evening. Depending on the time you're catching this broadcast. So I just want to uh, do a quick run on what's on the market and tell you what I think. Um, tell you my take on what's going on in the markets. Well, I get asked on a daily basis as to whether the market has bounced back. Any day we end up, we close the day on the green state. So it's something I've been educating people on a daily basis ever since the major crash happened on May 19th. So it's been an interesting run so far. I've so far observed two key levels that the market is that will determine the direction of where the market is going to go. So just to jump straight to action, I'm just gonna tell you these two key states, these two key levels. So everything is going to be boiled down on Bitcoin, since Bitcoin holds the key to where the market would how the market will play out. Everything hinges on Bitcoin. So I'm going to be doing my analysis strictly on what's happening on the Bitcoin chart. So um, there's no denying the fact that Bitcoin is currently facing like the start of a downtrend by the formation of a head and shoulders pattern, which started which started this here is the first shoulder pattern, which ended the formation of the head shoulders pattern ended around March 25th, and then the commencement of the head started on commencement of the head pattern kicked off on March 26th, which ended around April 25th. That's roughly a month. The commencement of the second shoulder started on April 26th, and this ended at the break of the neckline, which was on May 12th, 1 week prior to the major crash. So this happened, and this was like the start of a downtrend, at least for the interim for Bitcoin. So what I've come to observe is this: that majority of the markets, the analysts and experts alike, were all carried away by the performance of the altcoins, not paying attention to what was happening on the Bitcoin chart, and then this everything sort of came crashing down on May 19th. So ever since the May 19th, markets have refused to markets have refused to go up nor down. You know, we're more like in a consolidatory state between two levels. These two levels are the 30K level and the 42K level for Bitcoin. So these are the key levels that will determine where the market will go. So currently, the major crash happened on May 19th, which took price to exactly 30K USDT for Bitcoin. If you look at it from the Binance chart, and ever since, um, it's been consolidatory between these two levels of 42K and 30K. The following day, which was on 20th May, there was a rejection of the 42K level, major resistance level, and also the following day, which was 21st May, which was 2 days later after the crash, a similar rejection of the 42K level. And ever since it's been like choppy on a micro level and consolidatory on a macro level between these two levels. So here's why the 42K level is a very critical level to break for we to have any chance of a market bounce back. So it all boils down to confluence. The greater confluence is basically about, you know, it meets different technical elements are pointing towards the same direction. And the more of these elements you have pointing towards one direction, the better your analysis, the more reliable and more confidence you have in your trading decisions and analysis. So here's why 42K level is very important, very key. If you go down to March 8th, that was the first time this price was made. It was an all-time high for Bitcoin on January 8th, almost 42K dollars. And this served as resistance for a couple of days. And next couple of days served as resistance for the market. And this flipped back to support on February 8th when this level was broken. This was exactly 1 month. February 8th, this level was broken, and then a new all-time high was created or set. New all-time highs were set rather in February. We had the peak of February on the peak price in February coming on March 21st February for 58,000. Oh, I think that was when Elon Musk came in with $1.5 billion and stuff. So took the price up to that level, and then there was a huge sell-off, which took price down to back to this level. So this level, which acted as resistance, the 42K level area, 42K area, which was a former all-time high in January, flipped back to and became a resistance, flipped back to support February 28th. After the all-time high of 58K, we flipped back to support. So that made it a neckline, and then make adding a ton of confidence to that level. So this level flipped back to support, becoming a neckline in February 28th, and then sets and this sets us on course for new all-time highs again, a new all-time high again in March 13th marked a new all-time high as a result of the support that was able to hold for 42K level area. And we had 60 almost 62K on March 13th. So we've had more all-time highs, 64K, 65K in on April 14th, which was like a month later. And then started having a sell-off. The First of all, the 50 EMA, which has always been acting as support all the while, was broken for the first time on April 21st, and then acted as resistance late April, flipped back to support, and were unable to make new all-time highs. Meaning that no, we're unable to also make higher highs in the process, and then the formation of the second shoulder for was completed on May 12th, which also coincided with the break of the 200 EM of the 100 EMA level. So this sent Bitcoin further down, and then on May 19th, the major crash, which took alongside the rest of the market, happened, breaking the 200 EMA level, which is also in as at the time in perfect alignment with the 42K level, which is adding more confluence to this level. So it's a huge ton of confluence around this 42K level. As you can see, acting as a neckline that is flipping from resistance to support between January and February, and then acting as when it was broke, it acted as support again in May. May 7 on May 17th, 18th, before the break on May 19th. Ever since it broke, it has not been able to flip back. It has not been able to be flipped back to out to support. So that has made it a very very crucial level. So the 200 EMA alignment, the neckline, acting as multiple times as support and resistance. So this has made this level, 42K level, a very very crucial level. So when prices went down, crashed that level, compromised that level, the prices went down to 30K level. And here's the reason why the 30K level is the critical support area for the downside. 30K area is a critical level because it acted as support 7 times in January. One, two, it was able to hold as support 7 times in January. One, two, three, four, five, six, seven. And then the crash on May 19th made it touches of eight support touches, and then um, another another crash happened, not as serious as that of the May 19th, happened on May 23rd, that crashed down prices to 31K, which is within that region. And then we also have May 8th that sent prices down to 30, exactly 31K, which is all within the region. So this is making it 10, roughly 10 support touches of this area, this 30K region. So and so far it has proved buyers have been able to defend this area so well. It has not making it a very very critical area as to where the market would go. The inability for sellers to breach this 30K region has made prices to still be in this consolidatory state, as has prevented the market from going into a further bearish state, which would mean a proper downtrend for the market, and then like a continuation of a downtrend which started as the head and shoulders pattern formed for on Bitcoin. So you can see that these two levels hold the key to where this market will go. If break of this 30K level and the inability for buyers to be able to flip it back to support would mean a return for the bears, return of the bears for the market. It would attract more sellers to send prices, crashing further down below to possibly 24 to 24K 10K level or possibly even the 20K level. So on the flip side, if prices can, if the market can penetrate, break the 42K region resistance and then flip it back to support on a daily, weekly, or monthly basis, then we should have stand a better chance to set prices to new all-time highs. Set the market to we could stand a better chance to bounce the market back and then possibly see new all-time highs forming within the next couple of weeks or months. So these are the two key levels that I have seen. And so far it's been playing out so well. You can see that prices have been unable to go beyond this 42K level, and they're unable to go below the 30K level. Sellers are defending these two levels. They are defending the 42K level very well, and the buyers are defending the 30K level very well. So far we've been consolidating between these two levels on a macro level, why being like choppy on a micro level have been like choppy sideways in between. So the importance of these two, with these two levels are going to play in the market cannot be overemphasized. It's been very obvious, and I've been talking about them ever since the crash on May 19th, and it's been playing out so perfectly well so far. So the basically that is for the markets. Would be very happy to hear your views, uh, to know your thoughts on this breakdown, this analysis. Thank you. God bless you all. What else? What else? What else? Basically, that is it. Thank you so much. Have a wonderful trading day. May the bulls be with you.